Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist and the Algo Warrior. I like that, Algo Warrior of WealthPress. Good morning, everyone, and happy Friday. It's July 15th. July is halfway done. Don't ask me where the summer's going. As far as I'm concerned, we're still in January. I honestly don't know where the summer has gone. The market's going to open up in about an hour and 12 minutes. And as you can see here, we're up overnight. Now, one thing I do want to note, and this is important, really, really important. Oh, and by the way, before I get too deep into all of this, I'm going to have a webinar next week, Pattern Trader. The link is below this video it's a calendar style link. So I'll talk a little bit more about that. So let's get into this report and we'll talk about that when we get to it. But here's something really, really important that you guys need to pay attention to. The US markets have been actually doing pretty good, opening lower and headed higher. And then when we get the US data on the international market level, that's what's been pulling the US markets down in the mornings. So it's actually been a reversal. If you remember the beginning of this recessionary pressure or this downward spiral, the Asian markets were taking us higher and the US markets were taking us lower. Now it's happening the other way around. Fed news, international markets are taking us lower, and US markets are taking us higher. And that is a very, very significant change that I've noticed over the last couple of weeks. Another major change that I've noticed, and again, this is really important stuff that you need to pay attention to. Look at the long bond, all right? Are you seeing it? Down, 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 sideways, sideways, sideways. This choppiness started, let's see here, where it's 2.5 months ago, all right? Now I want to show you guys something. No tricks, no monkey business. Look at XLK. Again, I want to show you something else. Look at bonds. Look at XLK. Now look at bonds and look at XLY. Now look at bonds and look at XLC. Now look at XLK, XLY, and XLC. And then look at bonds again. Now, unless you're blind, and I'm assuming if you're watching this video that you could see the screen, and of course I'm being sarcastic, but as you can see here, there's a pattern here. There's a pattern. It's very clear. Even if you're not a technical guy, you could see it. We've been going down, 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 and now we're moving choppy. Now notice I picked the worst three, the three bottom performance, the three usual suspects that have been taking us down, right? Tech, consumer discretionary, and communication. I mean, these are the three biggest violators, right? This is what the bond market has the biggest impact on: consumer discretionary, communication, and the tech. It's real simple. Nothing what I'm saying is speculative. This is pretty. If there's 100 economists sitting here, they would be shaking their head, going, "Yeah, he's right." I haven't said anything controversial yet. So look at the bond market. Look, it started going down December of last year. We started going down December of last year on tech. We started going down, let's see here. When did we peak out? Right here somewhere, right? Right here, I guess. November on discretionary, and on, let's see here, all the way back in September on XLC, communication. And about a month and a half ago, the communication sector, which is out of these 10 sectors, this communication sector, which is at the bottom now cumulatively, but look at it on a monthly basis, it's all the way up here. It started moving higher. So the bond market is dictating the direction of these speculative sectors, and they're no longer moving lower. They're moving sideways. Look, sideways, right? Since, let's see here, since about a month ago, about a month and a half ago, sideways, sideways. They're not moving lower. They're doing exactly what the long bond is doing. And what the long bond is trying to decipher right now is whether inflation is going to go higher or whether we're going to go into a recession. Now, if we're closer to going to a recession, then we are closer of getting out of this. That means we've been in this for quite some time. That means we're not really looking at the back data as a recession, but we should be, which means this period was, in fact, a recessionary period. Remember, a lot of the data we're getting right now, it's lagging. It's not coming in real time. All the data from last month, that's like from 4 or 5 months ago. It's lagging. Remember, we have revisions. So the market is assimilating everything that already happened and it's already looking ahead. So if the bond market can stay choppy and can stay range bound and maybe even go higher because there's a higher rate of a recession, that means we're in a worse shape than we thought we were. And that means this whole monkey business started a long time before we thought it did, which probably did. But look at ARK. I'm not making this up. I'm not that smart. Look at ARK Fund. I mean, it's right there. So it's pretty clear that most of the speculative sectors are taking on a sideways, choppy trading action. And that's happening because the bond market doesn't know if we already are in a recession and how deep it is, or whether we're going to be into one and when we're going to get out of it. So it's a balancing act right now. But the long bond, the fact that the long bond is assimilating choppiness means the Fed is moving too aggressively too fast. And we may be backing away from it because A, we may be coming out of this environment. We may find out that we've been in this environment when the next report comes out, and we may have already peaked out. Matter of fact, I want to show you something else. If we go to the calendar, and I want to show you this, and if you look at the CPI, which was that nasty report everybody was waiting for, this is key. You will see that the core, this is what the Fed looks at, ex food and energy, prior was 6. We're at 5.8. Excuse me, 5.9. But 5.9 is not 6. So if we find out that the next month's report is going to be 5.8, say, or 5.7, then there's a good chance we already peaked out and the worst may be behind us, which is why the bond market is starting to assimilate some potential upside. Now, you've got 2 reports today, and they're coming out soon. They're coming out like in 5 minutes. Retail sales, which is going to be very important. Retail sales makes up 2/3 of the GDP. 2/3 of the GDP is retail sales. So it's a very, very important report. And obviously, I'm looking at it ex vehicles and gas. That's going to be the real important one. But I also want to see if the number is going to go higher. Last month's report was negative 0.3. They're expecting a positive retail sales. That would go a long way to giving us some sanity and giving us a little potential upside into this market. Keep an eye on this report. We're expecting 0.9, a little less than 1% on retail sales, and still negative on ex vehicles and gas. If we can get positive on ex vehicles and gas, that would be so good. That's the first report that's coming out. It's coming out in 4 minutes. The next report that's coming out is industrial production. And obviously, you guys understand what industrial production is, so I'm not going to go explaining what it is. But we're looking at a positive number, 0.1. And what I'm looking for is capacity utilization rate. I want to see this rate not go up too much. Because if capacity utilization stays in the 80th percentile, 79th percentile, that shows that we're not pushing our resources too much, which is very, 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 very important. Those are the reports coming out today. Aside from that, we've got earnings. Let me take you to global economy. We've got earnings coming out on Citigroup, Wells Fargo, United Healthcare. The bank stocks so far have not been coming out that well. They've been on the soft side, but they just started out this week. Let's see how they go. But for now, Wells Fargo came out with some negative numbers. JP Morgan, Jamie Dimon came out with some negative numbers. Banks are not doing that well, which is not a surprise in light of the economic environment and the inflationary pressure we've been under. Let's talk a little bit about global economy, and then we'll review some trades that we've done. China's economy contracted by 2.6% last quarter, obviously due to the virus and the shutdowns. Official data says they shrank by 2.6% compared with a already weak 1.4% last quarter. Year earlier, growth slid to a weak 0.4% from an earlier quarter of 4.8%. More outbreaks this week in China and elsewhere in Asia have raised more concerns about COVID-19, which that's the last thing we need right now. Inflation at the wholesale level climbed 11.3% in June, but the market rallied on this report compared to a year earlier. Painful reminder that inflation is running hot following a report on Wednesday, which is what I just talked about, the CPI, which said we went to 9.1 on a consumer level, higher than a year earlier. But remember, core CPI actually went down. And as I mentioned, we've got earnings, and it's a little too early to tell what's on the horizon. Now, we got some trades this week. We got into Apple on the 13th, which is right here, and we got out yesterday. It was a 24-hour trade. We made 23% return on Pattern Trader. But guys, Pattern Trader, 9 winners out of 9 trade, not including the bonus Russell trade we took. Not bad, right? 9 out of 9. No losers yet. Interestingly, though, I'm going to have a webinar, a class on Pattern Trader next week. There's a link below that you can get a calendar of all the upcoming webinars. I really, really want you to attend so you could see how we generated 9 winners in a row in this crazy market that we're in right now. I mean, pretty impressive, right? We also took Campbell's Soup for our top alpha stock trade. And this trade we held for, let's see here. We held this trade for, not too long. About 2 weeks. And we got into this stock right around the 29th, right here, right there. And we got out right there. So we just rode this nice congestion, got out, didn't have it for too long, made a nice 20.75% return. Again, less than 2 weeks. And folks, by the way, we're building a handy calendar that you could use to track all our upcoming training sessions, live trade rooms, events that we're hosting at WealthPress. You guys don't want to miss out on these. For example, I go live every Wednesday at 11:30 Eastern Time along with Jeff Zananeri and Lance Ippolito during the WealthPress Roundtable. You can get a link to that event by visiting the calendar and clicking the WealthPress Roundtable, right? Get a calendar. And if you missed yesterday's Great Market Divergence training, that was a doozy. With Jeff Zananeri's list on the calendar, it's there as well. Click on the event name and you'll find a link to the replay. All of our events in one place. So what do? I recommend you bookmark it. Bookmark that link. It's a gold mine. And once I have a day and time for my pattern trading session that I mentioned earlier, it is happening next week, we'll post it there as well. You don't want to miss out. This calendar is another step for WealthPress to be organized and help you stay organized. Bookmark them. You'll know all our events and our replays for the week so you never miss out on anything. I love that. I don't know why we waited 4 years to do that. We should have done that a long time ago. Follow the link below. Check out the calendar. Bookmark it. That's right. Bookmark it and get in on our WealthPress gravy train now before it's too late and enjoy Pattern Trader. 9 trades, 9 winners. What's to complain about? Plus, we took the Apple trade, the Campbell's Soup trade. It's been heating up. And again, remember, consumer discretionary, tech, and communication, choppiness. Bye, guys. Comments, feedback, email, support@marketgeeks.com. All are welcome. I'm looking forward to hearing from you. Post comments below this video on YouTube channel if you're there. It's on the WealthPress channel. Bye, guys. Have a great weekend.